We have our next guest coming on, and we're working on the schedule for this week since Nick is off to Greece. So we might see you again this week. I wouldn't be shocked.
Greece.
He's going to Greece. His sister's getting married, and she's getting married in Greece. So
she just jumped on a flight. Then
he's gonna go fight a cyclops or something.
Find a white beach somewhere.
Well, Ivan, it was good having you. I'm sure we'll see you again before the week is over, and we'll let you know ahead of time. So we'll see you next time, and have a good day. And guys, go sub to Ivan. I put his link in the chat. There it is, right there. And yeah, he's in our Discord. He's our A1 Trading mentor coach. He does exclusive webinars in there. So if you're interested in learning more from Ivan, check that out. He's in our VIP Discord. So Ivan, it was good having you.
Thank you very much for having me.
All right, guys. Now we're gonna take it's fall. We're gonna take the show over to Chris Pulver. He's also in our VIP Discord, and we're going to play a quick break and introduce him. He's going to take us to the home stretch. We got no one else after Chris, so Chris, it's all you after this.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else, and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Monday. Let me go ahead and grab the screen here. I'm just getting a trade posted in the alert section. Let me finish that up. Let's see, profit on the bearish side. Playing volatility through this week's Fed and end of month October kickoff. All right. So I am going to play a little bit of both sides here on the SPY. It would look something, I'm trying to think what the best way is to illustrate this. On the upside, I'm looking at a move to 577. Let's see if we have the long side here. So 577. And then I'll do a flip side short position and down to 540 like that. There we go. So move this over and I'm playing both sides. So basically I'm looking to see, put an arrow here. Arrow. Does price go up? Does price go down? And I'm going to play both sides of it. I suppose I can move this over here. So the dead zone for me is right in the middle. I'm giving myself more bearish potential than I am bullish potential, but either one should be able to offer some profit. If we see at least a $10 move one way or the other, I should be able to get some profit. So $10 up, $10 down, that covers the cost of my debit. I'm looking at a max profit of around $13 to the upside and $21 to the downside. Realistically, I'll probably end up managing a profit percentage, like a 25 to 50% take profit would be pretty solid. So I will copy this link, throw this in the chat there, and on we go. All right. So that's the SPY. I'm going to look at pricing out one on the Qs as well. So this week, I mean, we're coming into obviously a really important week. It's finally here. You know, all this talk of will the Fed cut, won't they cut, what's going to happen, how many basis points, how many cuts, blah, 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 blah. It's all here. Now, not all calendars are showing the same thing. Not all forecasts are showing the same thing. I do think this is really interesting that last week on, I want to say Wednesday, Thursday, it was up here at like 87%. 87% that the Fed's like just going to give us the old 25 basis points cut. That has quickly shifted. Now, I don't think this is a foregone conclusion. I don't think this is set in stone. I don't think this is a guarantee. I think the one thing I can expect to bet on this week is that the market is waiting with high anticipation of what the Fed's going to do. And ultimately, to make my decision, it's going to be about where price settles on the day and price settles on the week, right? Because look, I get it. Like we're sitting here, you're near the all-time highs in the S&P. We are not near the all-time highs in the Nasdaq. We are at the all-time highs on the Dow, and we are not near the all-time highs in the Russell. So let's talk about that for a second. So S&P has the ability to revisit all-time highs, right? QQQ has room to run to revisit all-time highs. The Dow, well, let's put Nasdaq here, I suppose, since you can trade whatever instrument you want. But Nasdaq has room to run revisit all-time highs. The Dow is hitting all-time highs again. And you could argue, I mean, maybe not from a percentage standpoint, but you can argue that it's price action on the Dow is actually more supportive than what we've seen in the S&P and the Nasdaq by hitting all-time highs. So something's happening where, the Dow is loving this current environment. We've made, I think, 3 or 4 all-time highs where the other ones have struggled since we topped out in July. And then the Russell has room to run for recent highs, also a ways to run for all-time highs. So if we are going to see, and last week we did notice this, we had that big turnaround on Wednesday, Thursday, Friday, broad market was actually quite bullish. So kind of spreading this out from just semiconductors and just Mag 7 and just the best stocks and just the highly concentrated run we've seen through most of this year with this narrow, light volatility, the market has broadened out a little bit. To the sectors that are usually not leaders, like utilities being one of the best sectors of the year. If we go to sector performance, this is kind of wild and crazy, but go to the year-to-date performance, and you have your S&P up 17.95. You got communication services up 19.56. You got utilities up 24.02. You got financials 18.38. Staples 16.52. So the reason this is interesting to me is this barely ever leads the markets. Okay. This barely ever leads the markets. Financials barely ever lead the markets, and they are some of the outperforming sectors this year. So utilities especially. And I don't really know why utilities are ripping the way that they are outside of there is a need for better, more efficient energy. There is a need for electricity. I think this is a lot to do with like the AI infrastructure that's being built. I've been long XLU all year. I wish I was long as far as like bigger exposure, but it was just pretty much just a bunch of puts and a bunch of bull put spreads. But it's been a nice little income generator for me. If we look at XLU, it is ripping to the upside, and we are sitting here, at all-time highs in XLU since the highs we had back in 2022. Now, I look at this and I'm like, do I want to get excited about buying all-time highs in utilities? Probably not. I think there's other ways to play this right now. So I'm going to be patient for a couple of reasons. One, if the market's getting a little bit over its skis, I could see a pullback happening. The month of September rarely starts out. If we start out with a rough sell like we did early in September, we typically see the market still finish the month red. I saw this back to like 1950. If the S&P starts out with a red September, like the first week of September starting out red or having, whatever pullback it is, every single time it's finished red. Now, obviously the market can be different, and maybe we can go 1 for 11 instead of 0 for 10. But historically speaking, the market has been green on the month 0 times in 70 years. If we start out red, we tend to stay red. So that does tell me that it is quite possible that we could have a bit of a fake out trade to the upside because all of the price about the Fed rate decision is already priced in, right? It was kind of pricing in here. It was certainly getting priced in here. I suppose, even though this was, what we thought was, oh my gosh, the Japanese yen's deleveraging and the carry trade is unraveling. But that quickly turned around to what? I mean, I don't know why with employment news, right in the headlines, the market had shrugged off everything within about 20 days. So we had this August 5th bottom, and within this actually goes up to about 15, 14 calendar days, we shrugged off that entire move. So, I mean, I still think that this market loves to buy the dip, and that's probably going to still be the factor. But I just want to ask everyone here, how many of you think that this market can easily go up to 600 before we get a pullback to this level? Because the only thing that's driving it right now is just the Fed, right? We had employment news, which was bad. We had inflation data, which was fine, but it was expected. I mean, everyone knows that inflation data is trending lower, right? Employment news, we still have more wait and see from the Fed, and we might hear this from Jerome Powell on Wednesday. But to get to 600, to stretch another 5, 6, 7, 8, 10% higher, I think there's going to have to be broad market participation. I think we're going to still have to see a good earnings season, and we're not there yet. Like, earnings season is still out another month. So for me, I don't think there's enough evidence to go and justify this move all the way to 600, when instead, I think the market is way more risky to the downside in the near term than it is the upside in the medium to long term. I think we still get higher, by the end of the year, as long as we don't have some crazy shift in policy expectations going into 2025. But just because we're sitting here near those all-time highs, I could see a fake out trade that has more volatility to the downside. I don't think we necessarily have to go all the way to where we thought, the world was going to freaking, end momentarily for a flashy Nikkei dump to 27% of the Nikkei and 10 to 15% of the S&P and the Nasdaq. But I could see the volatility having this effect where nothing really happens, right? Other than volatility. So that is what I'm playing. I'm playing volatility where I'm giving myself some upside in case this melt up continues. I'll take advantage of it, but I'm giving myself more downside in case the market's going to go way, way lower, way, way faster. So, Greg, I hear you popping around there. What's up, dude?
Hey, Chris, what's up?
Not a whole lot.
Can you hear me well?
Yep. Let's see if we can. There we go. Now we're both on the stream. You working from home today?
It's a little different having we're all home. Nick and Julie and other people are out of the office.
Okay.
For a wedding. So they're
Nice.
in Greece.
Not too shabby.
Or they're going to Greece. So we get to work from home.
There you go. So what are you thinking this week? I just put on a trade on the SPY. I was going to price one out on the Qs. Let me take a look at the Qs really quickly. I want to get a point measure here to the downside. If we go down to retest this recent low here, Frank, I like a move that is 22 points away. I'm going to go out to October 4th on the Qs. And I want to get myself enough volatility where we can get through this week's triple witching. We can get through the Fed. We can get through the end of the month, which is the 27th and 30th combo. That's a Friday, Monday. And we also get into the first week of trading with non-farm payroll on the 4th. So if I go out to the 4th, that Friday, we're trading at 471. If I buy the 472, buy the 470, I might even consider one strike higher and lower to lower the cost basis, get myself a little bit of a dead zone. That's a $4 dead zone. I don't love that. But anyway, let me see what I can price these out for. So if we're at 471 and change.
Is this a strangle?
Nope. This is going to be a reverse iron condor. So right here, I'll show you what. So here, and analysis. Can you see that?
Yeah.
Okay. So I have my dead zone. I have my risk. I'm going way more profit potential on the put side than I am on the call side. But still, I would make about I'm trying to think, maybe around $400 a contract on the call side, and potentially making I'm trying to think about $1,100 on the put side. So I know I'm balancing the trade a little bit differently, but I think that we are limited more to the upside than we are to the downside. If we have high volatility, I think that high volatility comes crashing down versus ripping higher. I think we could melt up higher, but I think we'd more crash to the downside if price action shows that there's just not enough, momentum to like push us significantly higher. So that's what I'm doing on the
Right.
SPY. I'll do something similar to that in the Qs if I like the price, but I'm trying not to pay an arm and a leg for the Qs. So I want to price that out right now with you. All right, so if I did a 472 by 470, maybe the 473, give myself like a $2 window to the upside. So if I went down here towards 449 on the puts, 449, that's way down there. I'll just say 450. So sell that put. That gives me $20 of downside potential. And on 473, that high is 485. This gap is 490. I think 490 looks good. 490 looks good. Let me see what I can get for a sell trade there at $1.85. So I could pay $11.50 and have 17. So let me do the math here. So I could pay $11.50 for the debit. On the upside, I'm giving myself $17 of potential profit. On the downside, I'd be giving myself about $20 of potential profit. So probability of
How
profit.
far out is this?
This would go out to October 4th.
Okay.
So I'm buying myself some time in the trade, because if I'm, trying to play it like, it's got to be this week. It's like, well, if it's not this week, and let's say it's a bunch of noise, but then after the Fed and after this week and after triple witching, then the market starts to move. I just think, we still have more data to come when it comes to employment news. We have the end of the month as well as end of quarter. So I could see that being another reason why the market has enough components to help it move. And I'm just going to try to grab something here October 4th. So if I could get, let's say $4 to $5 on the upside, and I could get maybe $8 to $9 to $10 on the downside, that's enough to hit a nice little 25% take profit, 50% take profit. So I'm going to take this trade, dude. I'm going to try to get 1150 on the Qs. That gives me 17 to the upside and gives me 20 to the downside. 1150. I might have to take 1155, but let's see if it'll fill me. So here, 1150, not filling. Let's go 1152.
490 on the Qs.
I filled at 1151.
So you got a 20-point move to the upside and downside?
The upside is $17. I'm doing a 473 by 490. And the downside, I'm doing a 470 by. Okay. Yep. I'll type it out in just a second. I'm going to get these trades in. Just give me like 60 seconds to get all these trades in. Okay.
Yeah, I'm looking at SPY.
Okay.
Just debating taking something there.
All right, I've got everyone's account in. Very nice.
So
make sure those all filled.
I don't know if you already talked about this or not, but this morning I looked at the Fed Watch tool again.
And now they're talking 50 basis points.
Yep.
Yeah. When did that? So I saw you post that. I saw you post that last week. What day did that shift the most? Where we went from like an 87% probability to be a 25 basis points, and then it went to like 50-50. What day was that last week? Was that Thursday?
I don't remember it being 80. I remember
it was like 87% early last week.
When I posted, I think that was either Thursday or Friday. I think today was the biggest change I've seen.
Well, today,
like 49 to 65%.
Yeah, it's nuts, man. And honestly, let me take a quick peek. So now it's 57 to 43. Let's take a moment here. Will you share the screen and bring up a couple of different? Do you have like different economic calendars in mind? I'll get my Q's trade posted here in just a second. I'm gonna do QQQ. I'm gonna get this posted.
Economic calendars.
Yeah. So like Forex Factory on Wednesday this week. Let's go to Wednesday. So Forex Factory still has the Fed with a 25 basis points cut. This is what's forecasted. So I want to go through like
Right.
maybe 2 or 3 different calendars and see, are they all showing the same thing? Are they all showing different things? Are they all showing the Fed might only cut by 25 basis points? So this calendar shows Wednesday. This is only showing a 25 basis points cut on Forex Factory. If you go to, let's say, what, Daily FX is another one.
Yeah.
Daily FX. Where's my calendar? What? Analyze and learn.
Might be
Economic
hard to
calendar.
navigate. I don't know
What the?
if this is for U.S. traders.
I mean, economic calendar. Let's see what Bloomberg says. This is pulled in. Your keyboard is so loud. It's so
Yeah,
loud,
my
dude.
bad.
It sounds like you're typing with wooden fingers.
Maybe I am.
Maybe you are. Maybe you've got Jenga pieces duct taped to your hands.
Yeah, these
All
are
right.
very clicky sounding. So
Let's-
this has on Market Watch. Oh, it does not have a forecast.
Okay. I'm looking for Wednesday interest rate decision. Interest rate projection. Projection current. Okay, so this is interesting. So this is Bloomberg. They are showing the current interest rate projection at 5.1. And we're sitting, so right now, I mean, technically the window is 5.25 to 5.5. That's the current window. So if we get a cut to 5.1, is that going to be like a 5.1 to 5.35? Is that like a weird, that maybe that's a 25 basis points cut, or is this a 5.5 on the high end down to 5.1, which is roughly that 50 basis points cut? Here it is right here. This actually, see this interest rate decision? So they're forecasting 5.25. All right.
Yeah, so just a smaller cut than
Small cut by Bloomberg.
what we
All right.
think.
So we got
I
Forex
mean,
Factory.
the Fed Watch tool is constantly changing, so
Oh, I know. It's nothing.
it could
This
be
is
back.
definitely going to be a mess. It's going to be honestly, this might be so this tool, by the way, had only been wrong since 2009. Like that was the last time this tool was wrong. So going into the rate decision, it's only been misled one time. That was 2009. Other than that, this thing has been 100% accurate, where going into that final day of FOMC, this tool is spot on. So it'd be a wild surprise to the Fed, if every calendar says 25 basis points and the Fed's like, we did 50. And again, maybe it doesn't mean anything as far as what direction. Like I don't know what direction we're going to go. Okay. But I do think that a surprise would be what the market doesn't want to see. And so a lot of volatility would be more likely if we have more of a surprise. And so I think that the game here is we just check this every day. If it's edging out one way or the other, okay, fine. If it gets to be 50-50, then we're coming into that Fed decision with a coin flip. And I don't know what it's going to do. So what I'm doing is I'm taking advantage of that and trading it, So anyway, this is one spot that I'm going to be watching to the downside on the. So that's one level I'm watching on the Qs, and then on the upside, looking to see if we can fill this gap. So that's my Q trade.
I think there is there could be a muted trade this week, regardless of what the number is. We could just end up kind of where we started, and then next week is when things start to pick up.
I agree.
Kind of how it's been recently.
Yep. I agree.
I'm thinking about taking maybe a vertical, like a bear call spread above the highs for Friday.
Okay.
57.05. That would be, if I price it in, that's $1.10, $1.20 right now. But that would be 4 days for $1.10. Oh, but that's also above highs. What do you think of that? Do you think that's too risky?
Let me take a look at it. I'm going $1,700 max profit on bull side and 2,100 max profit on bear side. Okay, I want to price it out with you. Just give me 1 second to post this. All right, so that alert's posted in the A1 Trading Chris's trade section. I put that one under index trade. So I did the SPY this morning and the QQQ. So I posted that in the under my section for Chris's trades under index trades. All right, what you're talking SPY, Frank?
Yeah, or
Okay.
SPX.
SPX, okay. All right, and are you picking a direction?
Yeah, I mean, I don't want it to go above 57.05.
57.05. Okay, so 57.05. So 57.05 by 57.10 bear call.
Yes.
Okay. Let's take a look at it. I think Ivy should be somewhat high, but actually, let's take a look at this one. I think it's obviously going to be trading for less now than it would be if price gets higher to that level. So let's go to what expiration are you kicking around for SPX?
Friday.
This Friday.
20th.
Okay, this Friday the 20th. Got it. So we'll do a PM expiration, not AM. 57.05. 57.05 by 57.10. Now, right now, Frank, that's trading for $1.10. I like this trade if you put in a limit of like $2 or $2.25, just to see if price comes up and threatens that level and you get more credit. Now, you could also say if price were to, really test it and go through, let's just throw a number out here. 5,700. First off, we do have the ability, like ATR wise. The weekly average. Let me see. Let me get in. Yeah, I've got the daily. So the daily. Let's go weekly average. Add in. I'm going to add in another ATR here at the bottom. Average, true range. Is that the one that I wanted? Sure. And let's do a weekly. There. I just want the number. Okay.
What is
so,
that? 100 something?
153 points. Yep, 153 points. So to the upside, we obviously had like a kind of a neutral start to the week, but 150 points to the upside pushes us to maybe 57.70. But there's no guarantee that we're like just going straight up for that full weekly trading range. Look, if you like the level, that's really what you're telling me is you like the level of 57.05. I like this trade where if price were to blow through that spot, putting this in at like a $2.50 to $3 credit, that way you at least risk less than taking the trade right now. I don't love the trade at $1.10 because that price could certainly be threatened. Now, if I move this up to like a 57.50, right? So we said that the high side, if we did 150 points on an average week, that would put us up to around 57.70. A 57.50 trade, if I shift these down, if I sold the 57.50 by 57.55 and I got filled for $1.50 on this trade, I like that one for less credit, but that's also, towards the outer edge of that weekly trading range. But for your trade, I think as long as you take like $2.25 credit or $2 credit, $2.50 credit, I don't think that's too bad as far as like just a binary, I win or I lose. But take more credit up front so you're not putting on a big risk. That's what I like.
Gotcha.
Yeah.
Okay. Daily though, I don't know if this week is a good week to do something like that, like sell bear call spreads or bull put spreads. Unless you're doing it and you think it's going to work. I feel like this week's going to be kind of volatile, but what are your thoughts about doing like a 0 DTE on the bear put side or the bull put side?
Bull put side. Today is, I think today's fairly safe. Let me look at the SPX. Let's go out to just this expiration for today. We're already pretty quiet on the day. Bull put, maybe the, I mean, I would just keep it based on a high probability delta. I like the, let me look at the chart here. So right now, all the levels that I'm seeing, so this was, did that just happen? Did we just have a 15 minute candle that did that? Yep. Okay, so we did have a decent little slide. Would you rather put in a bull put spread or bear call spread, dude? I think going on the day like this
Probably
high
bear
would be,
call spread.
yeah, I kind of like the bear call
I
spread
like
better based
going
on that
above.
price.
Well, I wanted to go above all-time highs, but I mean, obviously, if you do that today, you're gonna collect like 2 cents maybe.
Right.
So I was looking
see
at a
what-
week.
Let me see what 5640 looks like for today. So if I went up, this high is 35. If we went to 5640, I'm curious if there's any premium there. 5640, sell. And that's not too bad. On a 0 DTE, if I could get this 5640 by 45, maybe filled for $1, maybe $1. We're trading about a 15 delta. That's an 85% probability profit. Not too bad. Bear call spread, you know, you'd have to settle for probably 75, 80 cents, which does put a lot of risk on the table, which I don't love. But if price goes up, which it's doing right now, I mean, price is kind of rebalancing that candle that just dropped in the 15 minute. If all we have is price going back and forth, which that's what I'm suspecting is going to be today, is like very quiet, very muted price action for today. So I do think a bear call spread like 5650 is probably fine. I think it's a pretty safe
Okay.
trade, to be honest.
I probably won't take that today.
Yeah.
I don't know.
I'm
gonna look for the end of the week,
Yeah,
but we'll see.
we will definitely see. I'm contemplating this trade, but I got burned last week on that broken wing butterfly. Let me think about this.
I know.
So I go call butterfly spread, move these up. I'm gonna move this up. I can also do the NDX. Hang on 1 second. I don't know. I might try another broken wing today. But it's gonna be credit. If I trap it, that's luck. What do we say? 5650. Let me move this down. So 5650. If I pin that price to 50, 15 cents for a profit trap. I mean, it's just not that far away, dude. I mean, it's outside the expected move, which is fine. There's about an 88% chance of profit. Am I happy with 15 to 20 cents for credit? Not really. But the profit trap of making $500 today does seem kind of enticing. I just don't want to have price do something stupid like it last week and blow through my tops. Let me check the NDX really quickly. But I don't know if the NDX is going to be close enough. Yeah, it's 10 points wide, so it's going to be a lot closer. Let's check NDX. NDX. So NDX, this one I might end up taking, Frank. 19560. I'm going to go up to 19600. I'm going to do a call fly on this one, 19600. I'm going to see if I can get any credit for this. 19600. So if I did 19600
for today.
For today, yep.
Okay.
So probability of profit is 96%, but I did the same thing last week and got freaking smoked on that trade. But if I get a profit trap, I do walk away with $1,000, and that's great. I think today is going to be somewhat quiet. I could still get 20 cents on the day. I don't love that, man. I'm risking $1,000 to make 20 cents, but I'm also putting a profit trap up there, which is a lot better to me than just a credit spread. So 19.6 would be.
You're doing a broken wing, right?
Yeah, a broken wing butterfly with all calls. Yep.
I see. I'm trying to price it out too. Mine's at like 8 cents.
8 cents. I'm showing a mid at 12 right now, 15 cents. Let me see if I can get. I'll put it in here. I'm gonna do the same thing last week. I'll put it in at 50 cents. So it may not fill. If price goes up a little bit to retest the intraday highs, maybe it works out. I'm gonna throw a 50-cent trade in here. I'll take the same the same risk I did last week. The spread's a little bit tighter, so I go 10 and 20 points wide. I'll throw this in. I'm going to try this one. This might not fill though, so I'm going to take my chances. That's going to be a pending order. NDX. I'll throw that in. This is also an index trade. NDX 9/16 expiration. Sell 19,600. Call. And then I'm doing 19,590. Call. And the 19,620 call. Okay, so I'm looking for 50 cents credit pending. If this trade doesn't fill, it will auto cancel end of day. Looking for $50 income if filled with 96% probability of profit. Also looking for profit trap with broken wing butterfly setup. All right. So we will see if I go to, if price goes up here. What's that?
What was the
I
limit?
put a
The
limit
price?
credit at 50 cents. 50 cents.
Okay.
So 9.
NDX.
16 expiration. Sell 2 at 19,600. Buy 1 at 19,590. Buy 1 at 19,620. 50 cents credit pending. Okay, so in order to get that, price is going to have to come up kind of intraday. If we can maybe see price back to like 19,450, I may get filled on this position. And then 19.6 is we'd have to break Friday's high. So, I mean, obviously there's risk. I'm going to be super mad if I get freaking stopped out again, but I think today's going to be pretty darn quiet, man. I don't think there's a lot to justify the market going any direction today. So anyway, that's the trade. So let me post the link right there.
Yeah, I think it's going to be choppy.
I do too. I'm kind of happy that it's choppy because I took a nice little win this morning on SPX. That was 60 cents a contract. Did a nice little daily strangle, so that worked out okay. But all right, so NDX is pending. The Qs, I took that trade on the Qs for vol. I took the trade in the SPY this morning for vol. So that's really my plan for these next couple weeks with what we expect to see the Fed do or not do with 25, 50 basis points. I don't know. I mean, I look at it this way where there's going to be something that happens. I mean, either the market is higher or lower, but I don't think the market's going to be going nowhere. And maybe this week is just super choppy and it's a long wick one way or the other. But once we actually start to see price go somewhere, I think the easiest way to trade in the near term would be just wait. Just wait for the Fed to close on Wednesday and see if there's any, decisive candle. Wait for the day in the week to close by Friday and look to see if there's some follow through. But I would just anticipate a lot of noise this week. Once we get through the Fed, earnings season doesn't really kick off until October. So for the rest of this month, there's really not much else for the market to digest outside of Thursday weekly income or unemployment claims for the U.S. What else do we have on the calendar for the next couple of weeks? I don't think there's much. I know we have a lot of central bank rate decisions, but that's Forex stuff. This week, in fact, we have the Bank of England, along with the Fed, along with the Bank of Japan, and next week we have the Swiss National Bank. So we still have several other banks that are reporting this week. So FX trades, I'm still long against the Swiss. I'm going to hold those positions. The BOJ, no rate hike is expected, so that just might be a bunch of chop, but. Yeah, I mean, let's see what happened here. CBRates.com. There were some cuts recently. The Fed cut, or the ECB cut 60 basis points. Australia is still holding their 4.35. Canada cut September 4th, and they cut another 25 basis points. Eurozone cut big September 12th. The UK are they forecasted to cut this week? I think they are, right? I think the UK is likely going to cut. Bank of England. Yep. So are they going to cut? No.
It says no.
So they're going to pause. Okay. Interesting. So no cut from the UK. Big cut out of the ECB. Dollar's going to cut for the first time. New Zealand did cut by 25 basis points. Australia has not. And Switzerland is still at 1.25, but I'm curious if they cut by the end of the month. Bank of Japan, not supposed to do anything. I love this. It says around 0.25. Nobody knows. Nobody knows what the BOJ is going to do. But anyway, I think volatility is going to be the name of the game this week. So there's ways to do it. There's ways to play it. I think you could do something. Do you want to do anything on the volatility, man? Do you want to do anything on the VIX? Are you still holding long on the VIX?
Yeah.
October,
Right now,
right?
the VIX is my call for October 2nd is at 168. I got
Okay.
it for 210.
Yep.
So I'm down. My open P&L is minus 20%. I was thinking about just taking another one, honestly.
Yeah.
If it's 168 right now, I might just grab a cheaper call on this because I do think volatility is going to pick up. If not this week, then next week.
Sure.
So
Yeah, I could see that.
might as well.
Sure, I could see that.
Also, I'm looking at gold too.
Okay.
I think this is the sleeper trade. This thing just keeps moving higher, but then it has periods of long consolidation.
Mm-hmm.
But if we get a pullback on gold here, we come back down to like 25, 30. Might take a stab at it and we'll see. But I was
something
in
like
gold and I didn't stay in.
Yeah.
Sorry.
You're looking at this
Yeah,
level to like
down
kind of
right at
buy
that
that resistance. I got it. I like that.
Yeah.
I want to take a look at
I just didn't want to
silver.
chase price, but
Sure.
you said silver.
Well, yeah, because that's what. So gold makes me feel like I've got to chase, and I'd love a pullback in gold. A pullback here is awesome. A deeper pullback is awesome. A deeper pullback is fantastic. Gold looks like it's more prime for that pullback versus if I look at silver. Silver, maybe. So here's what I was contemplating. If I looked at a bull put spread at this level or this level, and I just let it sit at a credit that I'm comfortable with, not now. I don't want to get filled now necessarily, but if price pulls back on silver, let me look at a price here at like 28 to 26 and just set in a pending order. I don't think that SI, if I traded silver futures, I don't think I'm going to get the price that I want. So if I went out to, let me see, I already have some expirations on silver futures. Let me just double check something. I don't want to overlap any expirations. So SI currently up around $4,500, $3,800. That is December and January expirations. Okay. And September and November. So I don't have anything in October for right now, which might be what I look to play. So I'm going to look at SI for October. And I have an October 28th that I can sprinkle in there. So what I'm going to do is on SI, I like this level below 26.
Is that futures for silver?
This is futures, yes. /SI is your silver
SI?
futures. Yep.
Okay.
So if I did a $26 put for 0.058, that's about a $290 income play. Now, obviously, max loss is something I'm gonna have to create a spread with this to not take on a ton of risk. I could also roll this as a naked put. I could roll up. That's just a lot of buying power up front. So I think what I'm going to do here is, could I do, if I did a 26 by 25.50, I reduce the buying power a ton. I do have some potential risk. That's not good. Well, what's this? So that's 0.25. So the trick, I'm just like, how do I price this with a credit spread? I'd probably want to take like a 0.05 or even 0.25, get filled on 0.25. Let me see what this is. If I did 0.25, 0.25 would give me $12.50 in income. That'd be about a 1-to-1. I don't mind this trade here, Frank. I think I'm going to do this with a pending order. Let me see if I did something closer to the money. So if I do a 31.25 by 31, I can get 0.14, and that's an at the money. That's probably more realistic of what I should expect. So I'm going to do this with like a 0.14 fill. All right, I'm going to do this. So 0.13, 0.14 is at the money. Take this down to the 26 level that I like. 26, I think, is a pretty strong support level. So 26 by 25.75, try to get filled for 0.14. And that income play would be $700. That'd be a $700 profit for a $550 risk. It's only tying up about $277 in buying power. That gives me a chance to throw something in on silver, let price come to me, not have to force it, not have to take a tiny little credit. Because the other one was considering like a naked put and then like a hedge that's out of the money. But I'd rather just take an income trade. So, I mean, I'm long and I like silver to this direction. But if I buy calls and price just does this and it accumulates more, I'd rather set this as my line in the sand and give price time to work. I think there will be a good time for silver to, really, really rip to the upside. And I'm just hoping that when it does happen, I'm, obviously seeing it and taking the proper trades to make some good income plays on silver. But anyway, I'm going to take the trade 26 by 25.50 or 25.75. What was that? 25.75, and go after 0.140. It's just over a 1-to-1, which is fine. The buying power reduces it next to nothing, which I'm totally good with. And then price would have to fall. This is the nice thing. Price can fall a lot. And if that gets filled, awesome. And we'll see if it does. And realistically, maybe, let me see what a 0.1 is.
I can see it too, that initial reaction.
Yeah. Let me see. I'm going to try 0.13. So that'd be a 6. That's about 1-to-1. A 0.13 is a 1-to-1. I think that's fair. And also that is a nice support level at 26.15. I'm putting my strike a little bit lower than that. So I'm going to try that one. All right, dude. So this is 26 by 25.75. I'm going after a 0.13 credit fill, which with the multiplier in the futures market, that would be an income play of 650 if I'm right, and a risk of 600 if I'm wrong. I could look at it as a roll, but it's hard to roll credit spreads for credit. It's easy to roll for debits, but I don't really like doing that. So anyway, I like this trade. I'm going to take it. So SI, I don't have any October expiration, so that's why I like the trade. And I'll place this one here. So 0.13, and I'm going to throw this in everybody's account. Just another way to hopefully stack up a little bit more income on silver and also give it room to drop. All right, a few more accounts.
One more thing that I'd want to look at is oil.
Oil.
Do you have any, are you selling calls on futures oil contracts?
Selling calls? I'm not selling calls. I'm selling puts.
So you have bull put spreads on oil.
Yeah. Yep.
Okay.
I'll jump into my
How
tracker.
far out is that?
Give me 1 second. October 28th. That's a 26 by 25.75, 0.13 credit. So 650 max profit. And 600 risk. All right. This is pending. Okay, let's go to oil. So CL, I'm trading futures, so CL. What I did on this trade was I did a bull put spread. I got filled at the 65.50 sell put by 64.50 buy put. I got filled for 50 cents. That's a $500 profit for $500 risk. And all I need price to do is stay above 65.50. The expiration for me on CL, I think, was out to November. Yep, I did a November 15th expiration. I'm giving oil some room.
Nice. I bought OXY last
I
week.
saw that. I think you and I talked about that last week. I think I bought some Oxy as well. Sounds like I bought drugs. OXY. I bought OXY. Yeah,
We
let's go
may
to that
need some if price goes down to 40.
one. Well, I mean, it's just gonna all the more reason to stay numb. If you're, dude, I don't know what
I'm
happened. If I
kidding.
saw you on Oxy, I think you'd just be in a coma.
I'm already really
All right.
tired as it is.
All right. When you say 40, look, I like 43. I think I did a dollar cost average. I don't think I did any option trade on OXY. No, I just bought some shares at because I had an assignment. That's right. We talked about this last week because I had the assignment and I still have the long put at 57.50. This is out to October. Now it's all coming back to me. OXY. Here it is. Yeah. So I was assigned the shares at 57. I'm sorry, $60 was the assignment, and I still have
So you
my
own it at
hedge again.
60.
So I own it at 60, but I still have my hedge running right now, which is up like $2,200. So what I'm going to look for, and before this, I think that I'm going to use OXY for this. I'm going to try to repair the stock, but I don't want to close it out right now because I think there is vulnerability to the downside. That clearly, like this drop has been dramatic enough. Like we're coming back to this level here. So if price keeps going, I can still use my 57.50 put to, so from this level I've got 57.50, so I can use that as my hedge and then still have profit, and I could own this maybe $1.50 or so off of wherever price is at. So if price does fall to 44 or even $40, I obviously have to time the long put, but I think I could repair the stock for, I mean, dude, if I get the stock ownership in the low 40s, I'd probably hold this thing to like a $50 strike price or $50 target, and try, instead of making like 50 cents to repair the trade, I'd probably look at making like $5 or $6 or $7 a share to make some pretty decent money. So I have until October October 18th. So OXY is going to be on my radar for the next couple of weeks to monitor it. Let me see here. So if we get back to $60, I'm going to put this back up. And if we go down to, I'm going to put a 40. Let's go, I think like 44. I'll go 45 to be safe. $45 alert. And then into like $43. I think that's a good spot to look to protect. $43.
Okay.
Protect long put. So I currently have some shares, but not a ton. I mean, I've got 500 shares of OXY on my margin accounts. Yep. And then this is interesting. So I have 400 shares. This is such a wonky assignment. Like I got assigned 400 shares on this account with 160 by 57.50 remaining, and I still have the 5 long puts. So it's something I'm gonna have to monitor because there's a couple of extra pieces to it. This one was assigned 500 shares. There's my long put. This one, I own 18 shares because I wanted a dollar cost average into it. I bought it at what price? 57. I started to sprinkle in some support levels, so I'll buy another chunk. The 9151 should be assigned. It got assigned 300 shares. Like it was so uneven for some of these assignments, which is weird. And then 18 shares. Yeah, so that was dollar cost averaging. So I'm not worried about the dollar cost averaging accounts. I'm worried about the 300, 400, 500 shares that were assigned with that credit spread. I have to just kind of parcel that out in the next 30 days or so and figure out what I want to do with it. So it's easier if it goes down. Yeah, it's easier if it goes down for me because then I can just I will kind of more gladly take the profit on the long put, own the shares as low as possible, maybe $1 or so off the lows, and then try to repair it for maybe 50 cents to $1. If I repair it for $1, I'm at 500 shares, 300 shares, 400 shares. Flip it for a couple of bucks. That's a lot better than losing on a credit spread. But anything else you like in the oil space right now besides OXY?
No, I know Nick was selling puts on XOM, I think.
XOM. So that's Chevron, right?
ExxonMobil.
Oh yeah, Chevron CVX. Yeah, say it. Yeah.
Let
I get
me
all right.
let me make sure I'm telling the truth here, because
Okay.
I could be wrong.
So
I
right
think
now
he
I
was
kind of like
doing.
I kind of like a strangle on this one. We're right in the middle of this range. If I sell a put, sell a call, I wonder. It may not be like great credit, but I'm gonna check it really quickly. So above 124 and let's say below 100. Let me see if I can look at a strangle in XOM. XOM.
Well, how far out are you thinking?
I don't know. I probably, I mean, I'd probably do like a 45 to 60 day and just try to go for a profit target. We have
Right.
earnings on the 25th. So if I did just out past the earnings play, try to collect a little bit more IV, we're at 38.7, which is kind of low. I wouldn't really want to be in this trade before that. I think what I do is if I took a trade at 46 days out, so I said 124, that's a 12 delta. Let's do a 16 delta here, and then a 12 delta. Okay, so I could do that strangle, 16 on the call side, and 101 on the put side. I'm going to go wide with this, 101 down to 90, and then 122 up to 135. Oops. I don't like that trade. Only getting 55 cents. Plus, it's a spread. You can't really roll it. You can't really do anything to roll it up or down. Never mind. I think the IV is just too low. It's not a, I don't know. It's not a good enough trade. But longer term, I mean, look, if somehow XOM came back down to $100, I think it's just a good trade to buy. You buy it at $100, it goes back to 120. I think we're in pretty good shape there. And I would hope that also buying ExxonMobil, if interested, is not just buying oil. This is also buying energy. Whether this energy is clean at some point with more, solar, wind, hydro, nuclear, I have no idea. Speaking of nuclear, I haven't looked at this in a while. This is URA.
Nuclear.
This is one of my, yeah. So, well, like the big energy push moving forward is, well, uranium is used for nuclear energy. So this is huge in Europe. This could be like the next big energy wave where if we don't quite make the leap, full into solar, full into electric, full into whatever, I think nuclear energy is potentially way cleaner and way more cost effective in the future. But the demand for uranium right now is incredibly high. I'm quite surprised that uranium has been, as range bound as it was. So I'm just looking at this. If we get back to $20, I've got a couple of trades on uranium here. $20. I'll put here major support. So I have some puts. I'm willing to own some shares, and I'll put a little box at these lows. So that's a pretty good support zone if you ask me. I do have some exposure on URA right there, and positions. So currently, I own some shares, and those were purchased around $25. So I'm upside down about what? Oh, I bought it at 27. My fault. I bought it at 27. I've got another entry at 18.25. I also have some option plays. I have a long call out to 2026. So I'm treating uranium like I'm treating bonds. I'm way out in the future here, trying to give myself like a year plus. And then I've got the $20, $19, $18 puts. So that's kind of how I'm loading up a position here where if it goes to 20 and finds support, I can have 20, 19, 18 for income. We come back to range highs, or I own some shares and we get back to the highs at 30 plus. I'm just wondering if we have this wave one, this is a corrective range to build some support. And then eventually if this does break, wave three is way higher towards like $45 to $50. But it's probably going to be a little supply and demand game of, there's this big paradigm shift into nuclear energy. All of a sudden everybody finds out that uranium is hard to find and it's super, super tough to procure it. And it's getting really expensive. And I don't know. So it's a play. It's one of many.
That's one thing to think about for uranium is that we may be shifting over to hydrogen.
Yeah.
So we might not necessarily need this, just because uranium is very dangerous. So
It's true.
I don't know
But
if that's super. I don't know if that's a huge concern right now, but maybe that's something to look into just in case.
yeah, well, the infrastructure on nuclear energy too, it's like a lot of it's based on like 1960s, 1970s technology and buildings, and so the infrastructure it's being updated where it's, you know, it, sure there's potential like Chernobyl again, where if something were to happen, it could be horrible and the fallout could be, detrimental. But if everything is upgraded to properly contain, properly have like clean nuclear energy, I don't know. Anyway, it's cheap enough where I could see nuclear energy being at least a phase as opposed to just going straight hydrogen. Um, I don't know. I mean, anything's possible. But I don't know, man. If we go to hydrogen energy, great. Are we going to run hydrogen cars? Are they able to explode on impact and become like spontaneously combusted cars if something were to happen? Like,
Yeah,
I think that's more of a new
hydrogen would
technology.
be like. I think it could be a worse explosion, but it also wouldn't. The the other thing is like there wouldn't be any radiation from it, I
True.
guess,
Yeah.
because uranium is highly radioactive. So
Yeah.
but yeah,
Well, alternatives are
I
not a bad play just because oil, I mean, oil supply and demand. I was reading a lot this morning. Like there's a big futures inflation move happening in China right now. Like pork futures are going to the roof. And then beef is way down. There's a pretty much a shortage with China pork. But there's a country that's still like this giant sleeping giant. I still don't know what China's ultimately going to end up doing. I just hope they step their game up and decide that at some point technically they're going to help. They're going to help boost their economy like the U.S. has done pretty much forever, influenced by the Fed, of course. But we'll see. So. Might have to be a little bit more patient on China.
Yeah.
But energy-wise, I mean, oil, I'm not even confident. I mean, this is why I took a credit spread on CL because I'm not even confident that oil is finding bottoms here. I mean, the seasonality of oil is usually it's cheaper by the time we go into the winter. So I could be playing the seasonal game that, we're here. I mean, I'd like to think that oil has the ability to go up. But if it does, I mean, one of the reasons we saw our CPI print 2.5 is we had shelter that's still trending lower. We had gas at the pump trending way lower. Oil's down 20+%. So, Frank, what does our CPI look like next month if oil is up to 75 or $80? I don't think our CPI prints at 2.1
I imagine
and
it'd be a
2.2.
little higher.
Yeah, I think it's going to be sticky again. So, I don't know. I almost wonder if it's intentional that the supply is trying to be aggressive and the US is producing just tons and tons of oil trying to so they can drive prices lower and just get those inflation prints to be better. But I listened to actually the podcast that I sent you, that YouTube video that I sent you this weekend. There's 3 waves of inflation and we're essentially sitting right here. We're sitting here. So I mean, is there a way to get through it and see I mean, maybe when I say it's sitting here, maybe we're still on the downward move to finish out rounding this. But if we have another flare up in inflation, I mean, I think it gets a little scarier, of course, but everybody could be wrong, right? That's all this
You think
like,
inflation gets worse?
well, I don't
Like
I
higher
mean,
than the double digits we saw?
that's what I was going to say is define worse. It's like, I mean, 9.1, I feel like if we get back there again, I feel like the second wave is going to feel way worse than the first wave because the first wave happened so fast, right? And it was supply chain issues and everything else that goes with it. So I think if we just have structurally higher inflation, we may still have, we might still have supply chains that are not falling apart at the seams. And so it may not feel the same way, but I just think that prices in general would be higher. But I don't know, man. I mean, I wonder where it's going to come from. I mean, the argument is that fiscal spending is going to be this big second wave of inflation. If we have tariffs, it's going to be what closes things off. We have more geopolitical tensions and more like global economy friction. So all these things can lead to higher inflation, but like to what degree? I think you'd have to like choke off supply chains for inflation to be bad on paper, feel bad as a consumer and business, as opposed to we still have some flow in the supply chains. People can still get what they want, but just prices are more expensive because, routes are taken off, or you got to get it from a different country, a different source. But we're not there yet. I mean, I think this is, look, I'm not going to position my portfolio for that if it never happens, right? So, I mean, I think if I'm treating the inflation trade, I'm just going to treat it like a trade. I'm not tilting my portfolio towards heavy inflation. Look, I'm going to tilt my portfolio towards long-term. The market's going to try to go higher, because if we debase the dollar, lose purchasing power, which we're going to continue to do, assets go higher. Somebody sent me this chart in my Discord this weekend. You've probably seen this chart, Frank. Let me see if I can find it here. Option stocks, Forex, rate cuts, Forex. Yeah, this chart right here. Check this out. This is, and Nick talked about this on the session. It was maybe a couple weeks ago. House pricing in gold versus U.S. dollar. Okay, to buy a house in gold, it's been the same since 1900. As far as per ounce, an ounce of gold to buy a house, it's about the exact same. A dollar amount is exponentially higher. Debasing, loss of purchasing power, and that will continue to happen, right? The U.S. government right now is operating at these deep, aggressive, consistent fiscal deficits, where it takes about $2.50 of debt for us to make $1 of GDP growth. And that is that's the path we're on until eventually we have like a fiscal crisis. I don't think we're there yet. We can clearly kick the can down the road for a long time. Ultimately, that's going to be, I don't know, at some point, it's probably going to be a 2008 all over again. But it's going to be the whole world's going to be involved as they were in 2008. And the reason why is everyone's drinking the same Kool-Aid, right? I mean, that's the unfortunate thing, is everyone that's tied into debt in order to grow your economy and grow the global economy, it has to be debt, it has to be credit and leverage. I mean, at some point there's a reality check, but the problem is like everyone's doing the same thing. So I don't know. I'm telling you, just if you watch that session, I think you and I should talk about that. Like, just because it's super depressing. It's super depressing to think like, what do we do? But the reality is, what you do is you stay invested, because assets ultimately go higher. Because if you're losing purchasing power in the dollar, stock market goes up. That is your best way to hedge against inflation right now, is to have assets. Right? If you don't own a house, if you don't own real estate, if you don't own land, if you don't own assets, you don't own physical gold and silver, you can still invest and trade it, and it, it's paper money, but basically it's still worth something right now. So I just think this is crazy that you can buy a house for gold and it's the same ratio as what it was back a century ago, as opposed to the dollar. So, and the same thing is true on the gains of the S&P. The gains of the S&P, it goes higher because we've lost purchasing power and debased the dollar more. So anyway, that's about as maximalist as I get for alternatives. But just stay invested, man.
Sad.
It is sad, but the whole world's been going that direction for a long time, and it's a runaway train. And at some point it gets really bad, and at some point something breaks. And that's ultimately what, that's why the Fed exists. Something's going to break and they'll have to step in and fix it, but it's going to be the Fed with the ECB, with maybe Bank of China. Who knows? It could be everybody. But that might be the big reaction of, you've got, Western first world countries versus BRICS. And then who wins? Is it, an entire economy based in commodities, or is it an entire economy based in credit and fiat and paper money that's debasing? So, but that's to be determined, and that's potentially years and years away. So does that do anything for us this week? Probably not. Just expect volatility this week.
Yeah. I mean, that's something that people have talked about for decades.
Exactly. So, and they talked about the death of the dollar for, look, man, the first newsletter I got on death of the dollar was probably back in 2008, 2009. It's been 15 years. Dollar's not dead. Still the world reserve currency, still the milkshake theory, still risk on, risk off. The Fed's still strongest, central bank in the land. I mean, it's going to take a long time for that to just go belly up. But the whole world is a part of it. But I'm looking forward to those conversations at some point, but hopefully we just do our best job to navigate it and actually, make some money along the way. So cool, man. Anything else for today? I think I'm good.
Actually, yeah, I do have one more question / idea on NVIDIA. So They do a lot of business with China, correct?
Yes, they do.
Okay, so China's economy is slowing. There's concerns of, how they're just not really picking up
Yep.
this year.
Yep.
Their CEO, NVIDIA CEO, said there was incredible demand. But if China is going to be declining, they were kind of an explanation why oil was falling. Do you think the demand for chips might go down too as a result of China's economy slowing down?
Yeah, I think there's going to be, I think the demand will be, so let's say we had this like ravenous demand for chips. I can see it just doing this. Or we like, we settle back in and just kind of find a mature like demand, because the last couple of months we've seen Google, Microsoft, we've seen, the adage right now is it'd be more of a risk to not invest than it would be to be investing, even though it could be early in the game. The big question is, are you going to get return on investment for those expenditures? But I think there will be enough like global demand. It's not just all China. I mean, and I still don't think China is going to zero. It's like, I mean, seriously, and this is another reason like contrarian can make a lot of money, and the bad part about if you are contrarian, you do have to sit through these phases where it's like you are early and it sucks to be early when you're wrong, right? And that was, I mean, it's a Big Short thing. It's like, it's the same thing. I mean, look, I'm early in China, but I do think that if there's any stabilization and then China gets out of this funk that it's in, instead of it sounding like it's uninvestable and nobody should be invested in China, for me, my exposure is it's single digit percentages, and it's like if I'm dead wrong, then I'm dead wrong. But if we have stability and we have a growth cycle ahead, or anything that's even if it's government assisted, where they just stabilize their sectors and stabilize real estate and stabilize tech and look for another growth cycle and actually add some fiscal spending like the US has done for the last 4 years, China can come back in a big way. I mean, the one thing that's been interesting is China was supposed to come out of COVID and lift the global economy because there was so much pent up demand that's there, but it just hasn't materialized. And the U.S. has kind of taken the reign, and the U.S. has carried the global economy through a lot of this like post COVID stuff. But I do think the U.S. is kind of peaking a little bit. I think the U.S. goes into like a sideways area, or maybe even a bit of a slowdown. I don't think a slowdown is necessarily full-on recession, but I do think the overall global economy benefits from a stable U.S. and a stable and stronger China. And without that, it's like I don't think one can just carry it all by itself. And if the U.S. is peaking and China's slowing, then I think that drags on everything. So to your question on NVIDIA, I mean, look at it this way, dude. Where do you want to buy it? I mean, I think NVIDIA still has a great head start. I think the demand is there. You look at companies like Intel and like Dell and these kind of legacy tech companies that are talking about, they recognize how NVIDIA is an absolute competitor, and they're years behind NVIDIA as far as catching up, but I believe that they will catch up. I believe that other companies will catch up, and I believe that NVIDIA's competitive advantage right now will cease in the next like 5 or 10 years. But it's still a good opportunity for, if we stabilize at $100 or $90, or I've got levels I want to buy it at like $75 or $80, I'll buy NVIDIA. I'm not saying I'm holding on to it for the long term. I feel like my run in NVIDIA I've completely missed. I have not had NVIDIA in my portfolio other than options for the last couple of years. I've not been long NVIDIA. I haven't owned NVIDIA shares. So that's my fault, but I also wasn't chasing it. But I don't know how much lower it goes. I mean, this is now, what is it, still number 3 in the world? The amount of forced purchases in NVIDIA shares every single day and every single month and every single quarter, it's going to stay bid. Like NVIDIA won't just drop off the face of the earth. I don't know. I mean, I think that there's demand. I think that the stock is massive now. I think it's time for the stock to slow down and stop going exponential. And I'd like to buy it cheaper, So I'm not chasing NVIDIA, and I know that everybody has been, but I don't think NVIDIA is going to, 200 before we just come back in and maybe retest the same couple lows we've seen the last couple of months. So The
I mean, I
big
just don't
key
see it. I don't see it going there this year, at least. It's going to be
going
hard to
where?
justify all-time highs.
Agree. Well, what we've noticed is look at the trends in their earnings reports. That's been the biggest reason. Like the trends in, so the earnings report, yes, they beat by 5 and 4%, but they're let's look at revenue. It's mainly the revenue beats. So their revenue trend has been up, but the revenue trend went from this like 30% growth to then single digit growth. So it's still growing, it's still performing, it's still beating earnings, but the investors were like, you know what, this isn't as good anymore because, you know, Nvidia was priced for perfection. Nvidia had to beat by 25, 30% because that's what it was priced to do. So I think a little bit of consolidation, you know, maybe just normalizes. A pullback in Nvidia would be freaking awesome. I would gladly welcome a pullback. And I mean, to where? Well, if you take this low to this high, even if we pull back into here again or here again, take this as a low, this is a high. Let's say we get to like a 38 to 50% zone. That's on sale. Longer term investor, that's on sale to me. But I don't think there's any reason I'm trying to justify Nvidia now. But there's ways to trade plenty of income plays on options. Speaking of, could I do something like this week on Nvidia? Maybe. I'm sure the volatility is high enough. Here's an example. We're at 130. Could I do a 130 credit spread? Let's find out. Nvidia has a 36.8 IV. It's going to be slow. It's going to be terrible credit. If I did something this week, we're right in the middle here, Frank. I don't think Nvidia gets to the highs. I don't think it gets to the lows. I could sell that. I could sell that and probably make a couple of bucks on Nvidia. I'd like to price that out actually with defined risk. Let's go 131 or
The
so.
IV is actually kind of bad this week.
It's low. It's really low. Yeah. Which also means that if I sell it now, I'm getting less bang for my buck as far as selling premium. I'd rather sell Nvidia when it's like a 50, 60 IV, 70 IV than 36. But if I went out 60 days, go ahead.
Well, think about, since the IV is so low,
Uh-huh.
and we have FOMC this week,
Yeah.
and maybe some fallout of it next week. What if we looked at what buying calls or puts would cost?
Buying put
Because if the IV is low,
yeah,
it's a lower premium you're paying.
let's try this. Let me trade Nvidia. I'm going to look at it first. I'm not just going to do it, but if I did sort of 116, if I did a 117 by 116, and then I sell against that, let me check my dailies. So I've got a weekly average of $13 and a daily at 620, $13 out a couple weeks. Let's go 117. Let's go to 130. That's 13 bucks. And then a 116 down to a 103. So I could pay $7.88 for what's a probability of maybe a $12 to $13 move. If we get back to, I mean, $13 gets me back towards these lows, just a little bit off those lows. $13 gets me this is $15 to get to the highs, and this is $16 to get to the lows. If I did, let me go 15 up and 15 down. So I would pay $8 for Nvidia to make a $15 move. I don't mind that trade. I think I could turn this into profit. I would need, so basically I need this. I need Nvidia to try to go here or here by October 4th. That's it. So, I mean, could it work? Yes. Could it just be chop suey? I mean, we could be choppy, but I think there's enough interest to get something with Nvidia to try to, you know, justify a higher low. I don't know. Because I think that, you know, if we have this big rip to the upside and the broader market's up and Nvidia starts to go, that gets tested easy. That level, same thing. So IV's low enough that I'd almost rather be a buyer than a seller, but I almost want to be directionally neutral. So I think I'm going to take this trade, man. I give myself $15 to the downside, $15 to the upside. If I pay $8.40, I'm likely not going to get the full $15 credit, but I could certainly turn this into probably $10 or $11 of credit, make a couple bucks on Nvidia. I'm going to take the trade. It's directionally neutral. It's just a volatility play. If I can cover the cost of my trade, I mean, the nice thing is on the week, we're expecting to see about a $13 move on the week. I'm only paying $8 for the debit. So probability wise, I can get money in the trade. So I'm going to take the trade. All right. So
say it's at like 9 or 10 tomorrow. What would you do? Would you get out?
No, I think I'm going to try to take this trade for like 10.50 or better. If I'm in for 8, let me see if I can get 8.45. 8.45. 8.45. Let me and also make sure I want to make sure I'm not overlapping any expirations. So Nvidia, October 18th. All right, so I don't have the 4th. Good. So if I went to October 4th, this is going to be the expiration. So I'll go 8.45, 8.45 debit. And that is upside of 15, downside of 15. Yeah, I'm going to take the trade, dude. Let's see if I can get filled at 8.40 at the mid first. 8.40 mid. I'm willing to take 8.45. It should be liquid enough to get filled. Let's try this. There. Not filling at 8.40. I will go 8.45 to be. Well, I'll penny it up there. 8.41. 8.43. I'm going to go 8.45. 8.45 filled. Cool. All right, dude, I'm in. Let me get these for the accounts.
Okay. I'm rooting for you.
8.45. You're rooting for me? Thanks, man. That always helps.
I'm actually going to fade your trade and
Do it.
Sell an iron condor.
Do it.
And bet that it won't move in 2 weeks.
Do it.
No.
You'll sell the iron condor for like 10 cents on the dollar if you do. So feel free to take that trade if you want it. All right. So I'm in Nvidia. I'm going to box this in. So I'm looking for price to get up to either revisit this level or revisit this level. And I'm looking to see if we will have price. Where's my drawing tool at? This guy. Was in here somewhere. There it is. So there or there. All right, so copy that and jumping into Discord really quickly. This will be under the stocks options trades for my alerts. Nvidia, I'm doing the 10-4 expiration. That was a 10-4. Yep. Okay.
What were the legs?
So I'm buying the 117 call, and then I'm selling the 132 call, and I'm buying the 116 put, and I'm selling the 101 put. So 8.45 debit, 8.45 max risk, and then I'm giving myself $1,500 bull bear max profit. I will likely protect at 1050 credit or higher. Yep. So if I get to 1050 or better, if it's this week, awesome. But I'll be looking to see if there's some type of move one way or the other that gets me a couple of bucks profit. If it does, that's my trade on Nvidia. So there it is. Okay, man.
2 weeks to move. I think that's a good trade.
I think we get. I mean, we can get through. I mean, the next earnings print for Nvidia, it may be in this chain here. The next earnings print, it's not showing up in the broker platform. I'm assuming it's going to be somewhere in like late October, November for the next earnings play. Let's find out. Nvidia earnings calendar. Tuesday the 19th. So, I mean, this is not an earnings play, but this is, we get through the Fed, we get through non-farm payroll, we get through whatever volatility comes post-Fed, rate cuts, not rate cuts, we get through tech and semiconductor, interest, no interest. I don't know. I do expect September to continue to be volatile. I'm just going to try to take advantage of it. IV is cheap enough that I'm going to pay for it. I think the probability of getting a $12 to $13 move is high enough that that's why I'm taking the trade. It only cost me $8.45. So if we get a $12 or $13 move, I've given myself enough wiggle room to get $15 of upside that $12 or $13 move could give me, $11, $12 of credit. I'll take that profit. So that's ultimately my plan for NVIDIA.
Yeah, I like it.
Okay, man. I like it.
That
Frank's
sounds
like
good.
it. Frank likes it. Everyone likes it. That's all I trade for, Frank. I trade for you
Right.
to like it. I need your endorsement on everything I do.
I know. I've talked you into a couple trades now.
Yep. We'll see if
I think I regret.
No. It's funny. The NDX trade that I took, it's not filled yet, so I'm pretty sure that's not going to take today. NDX, that little broken wing today, still trading at like 2 to 5 cents debit. That's likely not going to fill, which is fine. Everything else looks okay. So I think I'm good, man. Funny little side note for you. You can buy a silent keyboard, for your Jenga fingers.
Is it really that loud to you?
It's not like, I just think it's funny because it's just like the clickety clacks. It just sounds like you have an animal walking across your keyboard. But what's your microphone, by the way? Do you have like a Yeti mic? Yeah. You have a microphone that's like picking up everything.
No, I'm just using what's it called? My laptop for the audio.
Okay. That's why I use the headset so much, is like my dog can be on my lap. I don't think you can really hear me doing much of anything on my workstation. So I just use this because like noise canceling, and it just focuses on my voice as opposed to the peripheral noise. Like the Yeti that I have, it picks up everything. So
Gus is right on over here on the bed. It hasn't really done anything, which is surprising. He's just sleeping. So
that's good. Yep. Benji's over on the couch.
Usually he's up around like making noise and stuff, but
not today. He knew it was
maybe
all
tomorrow
business.
He will be.
Yep. Wait for the Fed day. Gus will be bouncing off the walls. He'll sense your excitement.
Yeah.
All right, cool. You good? Ready to wrap it up?
Yeah.
Okay.
I think we are good.
All right. Sounds good. Everybody, have a good rest of the day. We'll be back. Lots of streaming this week with A1 Trading. Mornings as usual, and then I believe we're going to have either a super long stream on Wednesday, or we'll have like a specific FOMC in the afternoon. So stay tuned for plenty of trading, plenty of live sessions. But thanks for being with us. Have a good week. All right, see you, Frank. Thanks, man.
Thank you, guys.
Bye.
See ya.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.